Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Beko, and today, in this episode, we have our special guest, Sunil Shah. Welcome again to the podcast.
Hello, Beko. Thank you for having me.
Yeah, so if you guys haven't listened to the first episode where we talk about Sunil's background, his kind of mental checklist, mental schema that he goes through, his commentary on the market condition with QE, and lastly, very importantly, his take on the Indian market as a whole. Please check that out before you listen to this episode, because I think it'll provide a lot of context to the company that we're about to talk about, which is Ebix. So please do check that out before you listen to this one. Just a quick background, Sunil, on Sunil. He's been a fund manager for a while. He now lives in Cape Town. He's, as I mentioned in the first episode, he's a true Renaissance man, writing novels now, also writing premium content on Seeking Alpha. That's where you can find him. Obviously he does investing with his own money now, but he has a lot of experience, managing other people's money as a fund manager in an emerging market, also in the U.S. assets. So. It's a true pleasure to have him on our podcast, especially to talk about this very exciting company that we both are interested in, and that is our mutual interest. That's how we got connected. First on Seeking Alpha, and by the way, just a quick plug on Seeking Alpha and Sunil's work. I think you guys should all check out Seeking Alpha. It's a good website. It's a great website where people like Sunil, who is super interested in investigating these different companies, write fantastic articles. You guys really should go check it out. I think it's a fantastic platform.
Yeah.
Okay.
Yeah. No, I strongly recommend Seeking Alpha to people interested in investing.
Great. That was a kind of long-winded introduction, but again, Sunil, welcome to the podcast.
Thank you. Thank you for having me.
Okay, so in this episode, we are talking about Ebix. As I mentioned earlier, this is a company that you and I are both interested in, Sunil. And, for me, I think it's a fantastic business that has a tremendous amount of moat. I think it really checks off all the boxes for me in my checklist. And I think it does for you as well, except maybe a couple of things which we will talk about. But
the one that's missing is the 20 bagger on the checklist, but we'll get there.
Yeah, we'll get there here shortly, but in this podcast we go through a checklist, right? We go through a checklist, and your commentary on checklists in the previous episode was really on point. It's not a checklist of very mechanistic way of filtering out companies. This is more of a mental schema that we use to go through a company so that we don't miss anything. But these are sort of more high level abstraction of ideas.
Yeah.
And so on top of the checklist, we always ask the question: can you explain the business in the simplest terms, and can you explain to me competitive advantage? That's the first on the checklist. So I'm going to toss it over to you, Sunil, to explain to the audience what Ebix does and why, what sort of competitive advantage they have.
Yeah. Okay, great. Ebix started in the US. It's like a 40-year-old company which has grown into the dominant insurance exchange in the US market. What does an insurance exchange mean? So when you buy a life policy or a car insurance policy or a health program, you will go to many agents, and those agents will go to many carriers, and you will fill out all your details, and then you will take the best quote. What Ebix did was automate a large part of that process, so that when a quote is being made to you, you would just have one generic form that you'd fill out, and Ebix's IT would extract the relevant details from your form for the particular insurance carrier that form was being redirected to. Things like your x-ray would be archived in one place, your health checks, so that information was accessible and convenient for all parties. So insurance is a very disintermediated industries. So you've got agents, you got maybe have an agent of an agent in a brokerage. Then you might have the insurance carrier behind it. And there's a hell of a lot of duplication of information and rewriting of forms or whatever. At the end of the day, you would then have a monthly premium that you would have to pay for your life policy or your health program, and this would all be automated on the Ebix exchange. So Ebix would just take a commission for the transactions that went through its exchange, and it's become the dominant player in America. And one of its key strengths is that the heavy duty IT work of integrating the legacy insurance um, um, IT systems, which developed over years, probably incompatible, kind of data in discrete silos. Ebix would go in there and unify that IT back office, middle office, provide a CRM front office, and it had the IT brain power, the heavy lifting capability, because of its farm of software engineers in India, which are probably paid 30 or 40% of the US equivalent. So they created a wonderful niche to earn 30% operating margins in the US. You had a very acquisitive CEO where once you have the platform, you can then buy um, discrete businesses, take their clients, integrate them into your system, cut costs, and so you could pay for a small insurance company with its policies, its customers, integrate it into your system, and slowly Ebix, both by virtue of its technological moat and by virtue of the fact that it kept getting scale by buying smaller unlisted companies or and integrating them, cutting costs, it became the dominant exchange. It's run by an Indian guy who had an amazing track record, and Ebix was one of the. In fact, by the end of 2017, this is a bit of a personal brag. Um, I had like I think my track record was in the top decile, the top 10% of fund managers and hedge fund managers. Um, uh, um, big, and a large part of that was Ebix going from 12 to 80, in which I had like a 20% stake, which at the end it started off, being smaller, but that was a primary reason for my excellent performance. Conversely, when Ebix tanked, that detracted from my performance. So up to about 2017, although there's no public data because I'm not a registered fund manager soliciting clients, Ebix was a great a contributor to my excellent performance. And then the chapter two is when Ebix collapsed, which we're going to talk about now. That took down my performance with it. But as I said, still on my checklist. I still think this could be a multi-bagger. That's still the checklist tick that I need to fill out on my form. Ebix looks like a company that could do incredibly well. And why? Well, they have this amazing IT expertise. They have automated an insurance exchange, and they are now deploying that skill set into India, which is now in the process of digitizing a primarily cash economy. So Ebix has all the attributes to become one of the payment gateways in India, and there lies the future potential. So having because do you want to now talk about the rise and then the fall? Oh, yeah,
Let me just yeah, I think that was a great introduction to Ebix. Let me just quickly summarize what you said there, Sonal. Just
sure.
so that people understand where we're going here. So Ebix, again, it's an American company based out of Georgia. that that has kind of, you can think about it in two-part business, two segments, largely two segments. One
Exactly.
is the insurance exchange business. There's like, there's the consulting business attached to it, but let's just say there's one business called insurance exchange, and then the other business, which what Sonal is talking about, which is the Indian business, EbixCash business. And so there's two businesses to it, and the insurance business is where really Robin, who is the CEO, really cut his teeth and really showed to the world that he can do great things with the
Yeah.
Indian talent over in India, the tech talent over in India. And so,
and and,
he,
and as a great CEO as well in identifying opportunities, buying cheaper unlisted companies. He had an excellent track record. I think in 2017, Fortune um, uh, gave Ebix, the award of one of the fastest growing companies in America, the
yeah.
top 10 fastest growing companies in America. Yeah.
Exactly. So, very, very promising insurance exchange business. It has a huge moat. Again, as Solon talked about, it's stitching together all these legacy systems and is so embedded into the operation of these insurance brokers, so that it's super, super mission critical piece of software that everyone needs to have if you want to participate in the insurance business. And so,
And
huge
once
moat
you
that
once you have it, sorry, once you have it, right, you're stuck. You're not going to reinvent your entire legacy insurance system, right? You are then captive to Ebix as a client. Sorry, important point.
absolutely. No, absolutely. I think, one of the things that we talk about in this podcast is what are different types of competitive advantage. We talk about moat, different types of moats, so brand, network effects, switching costs, low cost. Switching costs in this case is extraordinary. It's just like,
Exactly.
it's just like, when you are banking with a particular bank, it's really hard for you to switch to a different bank because all your stuff is in there, all your documents in there
Exactly.
is in there. It's
Exactly.
exactly the same way here with an insurance exchange, railway. Once you have it in there, it's super difficult to rip that out and replace it with another one. And so inherently, there's a tremendous amount of moat built into the business itself, and it's B2B business,
Yeah.
recurring revenue, all the good stuff.
Exactly.
That's the first
Yeah.
business that we're talking
So
about here, the legacy
yeah.
business.
Yeah. So in that insurance exchange business, 80% of the revenue is repetitive business, right? So once you tie that carrier in, all its monthly premium for all its customers go through your insurance exchange and you get your commission each month thereafter.
Exactly, and then just to point out one of the some of the recent development, they signed, Ebix just signed with J.P. Morgan to expand their operation. It's not like a dying business or anything like that. It is growing business, and so we
Yeah.
call it legacy business here, but still, it is still growing. There's lots of room to grow, even in the insurance
Yeah.
exchange side. But what is even more
Yeah.
interesting is a second business that Sonal mentioned, right? Which is the expansion to India, this e-train to Mumbai that I'm on board, and many other people as well, including yourself, Sonal. So the
Last
second
call to
bucket.
India. Yeah. Yeah. Okay.
Um,
So
yeah, just to
go
set
on.
the frame
Sorry,
for our
Bika.
audience. Just to set the frame for our audience. So these are two businesses we're talking about.
Okay. So go on. Sorry, Bika.
Yeah. So
Or
if you could quickly touch a little bit more on the second business, I think as I mentioned earlier to you guys, if you guys haven't listened to the first episode, I think it's critical that you do, because I think that is going to provide a lot of context to what we're going to talk about here. The second part of the business, the second segment, EbixCash, it's really tapping into the 300 million, middle class, all that stuff that we talked about in the previous episode. It's
yeah.
exactly, the thesis is playing out
Yeah.
here. So
Yeah. So
can you give us a little bit more
okay. So
color on the second part of the business?
sure, sure. The color will be primarily brown, as in being Indian. No. So the first part of the business, right, is your captive insurance market. The second part is the 100 bagger, if successful. Okay, which is Ebix deploying its IT experience to become a payment gateway in India. And I'll just in two lines. India was primarily a cash economy. In 2017, they demonetized the entire economy to make it a digital economy. So we have this 1.4 billion people um, subcontinent, which is going from cash, which was informal and untaxed, to a digital economy. And Ebix wants to be one of the payment gateways for the e-commercialization of India. Okay, so this uh, e- digital e-commerce is growing at an exponential rate, right? It's growing at like 80% sequentially per month as the economy grows and as the cash economy has basically disappeared. Um, so Ebix was going to use its formidable IT skills. The CEO always considers himself, I'm, an Indian. I'm first an Indian and then I have an American passport. Um, he was a very good operator in the US in buying cheap businesses, integrating them, cutting costs. It had all the attributes to be very successful in India, and India had just opened up as a gold rush. Okay, it was an open field. So in 2017, Ebix went into India. They took out a checkbook and they bought numerous businesses. Yeah, right. There's like they created huge waves in the Indian market because suddenly there was this Indian American who was just buying little businesses. Now, for example, forex. Okay, you probably know Indians go abroad to work. They go to the Middle East. They go to Japan, wherever they go, and they send their money back home. Okay, so there's all the forex. Ebix went and bought 80% of the forex kind of bureaus in India so that um, all that revenue would come through the Ebix channel, and he consolidated them. So now he consolidated airports. So when you land in India, and I think in the 12 international airports, Ebix has a forex bureau in 10 of them. Um, it's become a dominant channel for foreign exchange. Gift cards are when you get a coupon from somebody or you give somebody a present. It bought a gift card company called ITZ, which kind of formed the basis of its e-wallet. It bought a travel company to become, like online booking for your holiday, for business conventions, for your air ticket. So it started buying out a number of businesses, and two things basically happened. Okay, two bad things happened. One, they started taking their focus off the US. So the US business was, I thought, was impregnable. It had a great moat. It was doing really well. But for 3 years, you had slightly lower revenue year on year, 2 or 3% down rather than up, right? So because the CEO and the whole focus of the business was now India. And I think they neglected the US legacy business. Um, Secondly, the CEO bought businesses in rapid fire, and I don't think integrated them well, nurtured them well. Often the founders of the business he bought, which was the main kind of asset that was being purchased, walked out the door. Um, so we had a number of big problems in India, right? Um, then a major booby was Ebix decided to appoint an unknown, obscure auditor in India rather than a top 50 US firm. For this was just outrageous. Okay, I was so furious. I had an amazing relationship with management and IR until they announced this. On that day, I think it was sometime in 2018, the share price fell 50% in a day. I mean, India is renowned for, lax rules and dodgy accounting. And they had now hired an Indian auditor for its international businesses, including the US, which I deemed to be uh, free pass in massaging all the dodgy acquisitions and problems that Ebix might have encountered during their buying spree in India. Okay, um, that's when my relationship with Ebix started to deteriorate. When I said, "How dare you hire some sweatshop of a masala chai auditor above you while he sits there and massages the auditor massages your toes? Are you stupid or are you just dumb? You know, this is just a ridiculous decision to make." And sure enough, the share price fell by 40 or 50% on that day. If you look at the a chart, you'll see. You see sometime in 2017 and 2018. Um, so more problems started to emerge, right? In the sense that many of the businesses he bought, the founders left. Ebix America, the legacy business was one business, okay? And it was a question of adding things into an existing platform. Now in India, you had foreign exchange, gift cards, holidays, a whole host of different businesses. And I don't think the CEO knew how to integrate and nurture different divisions, right? One of my recommendations recently has been to hire a chief operating officer that would, whose sole task would be to integrate and nurture the talent and businesses that were brought in. So we're now at a point where Ebix has collapsed. The biggest folly was in just, I think, last year, 2019. They already had a travel brand, and they decided in their infinite wisdom to buy Yatra, which was the second largest travel brand in India, for $358 million. That company is now on the verge of suspension after the Ebix bid failed, and it's close to $30 million. And I said, this is the most ridiculous decision to try and buy Yatra. You have a travel brand. You need to um, approach Yatra's clients. Yatra is not capable of being a standalone entity. It never has, and it never will make a profit. Um, it is a company in trouble. You don't need to spend $358 million dollars to buy it. Um, get their clients, show their clients that you have a better holistic solution than Yatra, they'll come to you. Um, uh, I was right. Ebix lost, another 30% of its market cap as this deal was on the cards. I wrote an article saying, Ebix should walk from Yatra if shareholder interests prevail. And sure enough, at the end of the day, they didn't buy it because Ebix's share price collapsed. And that they simply couldn't afford it. They committed to buying it for 350 million, and Ebix's entire market cap had fallen from 2 billion to something like 400 million dollars. And that was at the low point, which is it got from, I think, went 90 down to $10 from 2018 to um, nine, $8 to $9 a few months ago. This year. Okay, so that was a massive 80-90% destruction in shareholder capital. Yet therein lies the opportunity, because we still have a formidable CEO who has been extravagant. There's one thing about India is how Bollywood infiltrates the psyche of Indians, right? And I think Bollywood went to the CEO's head. That may be why he doesn't want to talk to me, because I wrote that publicly. um, and I think he was, his lust for fame and being part of the celebrity set, the glitterati in India, he kind of lost his judgment, and he's made some bad decisions. He's let he overpaid for businesses, didn't integrate them well. The founders have left, but we still have the skeleton of an incredibly powerful story with a few distinct branches in e-commerce in India, and you are getting that at a bargain basement price. So after all the problems and the current state where investor trust has been lost, I also suggested that they should replace the board of directors, because they seem like cronies, spineless, yes sir, yes boss men who did not provide the oversight that this CEO needed to, harness his talents, but to constrain his stupidity or his narcissism. Um, and um, I'm still hoping that will eventually happen. That they will hire a chief operating officer to, deal with the nitty gritty detail of integrating businesses that are bought, and they will have a stronger board of directors which will provide effective oversight. For example, that auditor decision, is just insane. The board of directors ought to have stopped that in its tracks. And it lost Ebix 80% of its value.
Hmm.
Um, so that's kind of where we are now. Baker, do you want to jump in here?
Yeah. So let me jump in here really quick. There's a lot to talk about here. So on the second part, again, continuing on our thread of exploring and adding color to the second part of the business. What I really found interesting, Sunil, when I first looked at this business, the second part of the business, the EbixCash business, is really their unique approach in entering into the digital space. Robin Raina calls it the physical approach, the purchase of the its cash. I think it was a brilliant move, in fact, going into the every corner of India and having all that physical presence, meanwhile also
Yeah,
providing this digital experience. I think was the right move. And so I think that
yeah,
first intrigued me, and I think that still holds. I think that thesis still holds, that is
yeah.
going to be the winning strategy. Couple things that you mentioned here, a bunch of acquisition. They took out their checkbook and was on hiring spree basically for a couple of years. But a couple things that you mentioned, I just want to iterate on. Founders walked out, so the lack of sitting with the companies and actually integrating them to their infrastructures and culture and
And
nurturing the
tying them in.
brands.
Tying them in, not just paying them out, giving them share options that mature in 5 years, for example, things like that.
Exactly. So the founders walking out, making that auditor choice, I think that was the big one. And then you also talked about sort of lack of focus and yatra and some of the things that you talked about there. So what is really promising for me is, again, you talked about the valuation. The valuation at this point, with all the structures and infrastructures in place to really take it to the next level with focus and energy. And I think the potential is really at its current value. I think is
Yeah,
I think
yeah,
it's phenomenal.
yeah. I did a simple like conservative valuation, right? Because you still have that legacy business. They just won J.P. Morgan as a huge, um, prestigious client in America. So that division seems to have been, repaired. Just that division, I value at $1.5 billion, and using the proxies in India, there's a company called Make My Trip, which is just travel, and a lot of its revenue is just airline ticketing. Um, they've never made a profit. Okay, EbixCash is profitable with 20% margins. So their price to sales ratio, money make my trip, would be like a conservative floor to the valuation of EbixCash, and adding those two, you get $89 per share for Ebix, and the current price, which was at $9 about 3 months ago, is now $30. But you still got an easy two bagger, um, you know, that could manifest itself next week. Then you have the kind of Indian story, right, which is further upside. But at the moment, in my opinion, the base conservative valuation is $89 a share, and the current price is about $30, $35 a share.
Hmm. I do want to talk about a couple things on kind of the company as a whole, and I just want to go through these checklist items here. And I think we should approach this in two part, just like we did up here, two part, meaning we should talk about these questions in the context of the first business, the legacy business, and also in the EbixCash business. And so one of the things that we'd like to ask in the first part of the episode is the capital reinvestment requirement, right? So the classic return on equity, return on invested capital. So take us through how you're thinking about
Okay.
this
Yeah.
company as it pertains to the requirement to put in more capital to maintain its business and to grow its business. So in
Okay.
two-part answer, if you could.
Okay. Perfect. Okay. So let's go to the legacy U.S. insurance business first. You've got the moat, you've got the platform, you've got the IT expertise in India that integrates all the new companies, any new insurer carrier that they win. So you've got massive incremental revenue for little cost because you've already got the kind of cost base installed. Okay, it's recurring revenue. Like once your insurance carrier is on, the revenue of your monthly premium go through the Ebix exchange every month, and Ebix gets a commission every month from your life policy. Um, return. So the margins on the US business are 30%. That is very good. The operating margins. Okay, so you won't find many businesses except the old Microsoft Office or Facebook maybe, where you have such high operating margins. 30% operating margins is very impressive, and they can maintain that because of their cost base in India and the fact that they've installed the platform. So the return on capital is I can't quote it off the top of my head, but it's very attractive. They are using capital efficiently. They've hardly issued any shares, even through this massive buying binge in India. The share count hasn't suddenly rocketed. They're not just issuing shares to fund new businesses. They took on quite a lot of debt in India, $700 million to be precise. But it generates a lot of cash. The return on capital is good, even in India, right, where virtually every e-commerce um, um, company is generating losses. The phone companies, the what are some what can I sorry, lost my train of thought here. The tourism companies, they're all generating losses. Ebix is generating a profit. So the proxies like Make My Trip that I mentioned it loses $150 million a year, has minus 30% margins. Ebix says cost discipline. Rain always says, I think my job is very simple. I sell higher than my buy price. What I buy, I must sell at a higher price to make a profit. India is notorious for giving away freebies, coupons, first 3 months of membership free, um, uh, hotel nights at massive discounts. Ebix does not do that. Okay, there is very good discipline for this company to be generating 20% margins, even through COVID, right, where obviously the economy, came to a virtual standstill. Um, there was still some activity, gift cards. People wanted to stop using cash, touching dirty notes, touching an ATM machine. So a lot of business gravitated towards their payment gateway, and it accelerated the whole digitization of India. So I have no qualms about the profitability of their asset base. Okay, they have not issued shares. It's a tiny dividend, but in terms of capital allocation, I'm happy with the company.
Great. Well, I think that was a great summary. Just to kind of round out this episode, talking about sort of more high level qualitative aspect of the company and going into moat, just round this out. One of the last things that we'd like to ask in this segment is, does the company have favorable relationships with the following? In other words, does the company have any red flags when it comes to relationships with customers, suppliers, employees, regulators, and community? And
Yeah.
so I'll ask you that question also in two-part. If you could answer this question in two-part answer.
Okay, great. Okay, so let's just go first to the American US business. Does it have a good relationship with its customers? Yes. Most of its customers are the large insurance carriers. They're increasing their penetration. Um, do they have a good relationship with the regulators? There was talk about them being investigated by the SEC for money laundering. That was, I think, around 2009-10, but it seemed like a short hedge fund manager's smear campaign. Nothing came of it. Um, uh, Another very important relationship is, the auditor, I would say. And uh, they changed auditors, which was a terrible mistake. But that's reverted now back to a top 20 or 50 global. It's not one of the big four, but it is one of the top 20 global auditors in the world. I think it's called RSM. Um, One more thing that I've just thought, another thing I would say, relationship, you have to have a good relationship with the institutional fund managers. Okay, that's very important for a listed company as well. That's one relationship. Once you have a listed company, you have two products. You have your product and you have your share price, and you have to manage both. um, so lots of roster names on their shareholder listing: Vanguard, Fidelity, BlackRock. um, they are known successful players.
Mm-hmm.
Sorry, does that answer your question? On the other side, the India side, as I said, lots of problems, which I think have been recognized. Before when I when I when my relationship with them first started deteriorating, it was me questioning them, and they would just brush off me. No, that's not true. Well, we're not worried about that. But now there is definitely an acknowledgement that they need to bed down acquisitions. They need to integrate them. They've hired a new auditor. They are becoming a brand name in India. Um, so, EbixCash, because of his that Beko mentioned, 300,000 retail shops crossing the subcontinent, is a great distribution channel and brand awareness icon.
Mm-hmm. Yeah, just to kind of round this out, a couple of questions since you mentioned marketing and kind of brand recognition, and we'll talk about this more in the second part of this. But the Ebix IPO and it's the marketing campaign around it.
Yeah,
Having
that's great. Yeah,
EbixCash logo on jerseys of the cricket games, and also having like Ebix branded Republic Studio.
yeah, exactly. Yeah.
I think those are all the efforts that are happening right now to kind of turn this ship around and have a very successful EbixCash IPO. But great. I think that kind of rounds out some of the stuff that we want to talk about in the first part of this Ebix focused episode. Thank you guys for listening, and thank you, Sunil, for participating and leading the discussion. If you guys would like to follow Sunil's work, please, again, go to seekingalpha.com and look for Sunil Shah, SUNILSHAH. Look for him on Seeking Alpha. Again, thank you guys for listening, and stay tuned to kind of talk about the management, talk about evaluation, and again, kind of the EbixCash IPO more in detail in the second part of this episode.
Yeah, thank you. I just, you can't reduce a company analysis to a checklist. I mean, if that were possible, a computer would be doing it for all of us. So these kind of webinars, podcasts are key if you want to understand investing, because each story is indeed different, and you have to get into the detail to understand the worth of the company and whether you want to invest in it. So I think this kind of format on this channel is an excellent one. And yes, I wish you well in your burgeoning investment career.
All right. I'll talk to you guys in the next episode. Thanks, guys.